Okay, guys, welcome out to our market update here. We're going into the last hour of trading here on a Wednesday. This is Coach T from TackleTrading.com. Let's start with the heat maps. You know, sometimes markets start selling, and you try to figure out the news, try to figure it out, go and try to find a catalyst, and there may not be one apparent right at that moment. The bearishness has been building. If you've had a pulse, if you've been watching the market, you know the markets have been bearish this year. Since we started the year, we've been down. There is a sea of red. If you were a bull, you know, like in Spain or Mexico or somewhere, you'd be charging that right there. Google down 3%, Facebook down 4%, JP Morgan, Wells Fargo, every sector, there is not a space in the market untouched. The only area that would probably be predominantly green would be utilities, very defensive play, probably money floating into there today. It's a good reminder that if you don't have a plan, you know, if you don't have a hedging strategy for your portfolios, whether they're long-term or short-term, that could be in inverse ETFs, it could be in portfolio insurance, it could be in hedging, then you need to get one. You need to develop one. You know, whatever your gains or losses are short-term in the market, it really isn't that consequential. It's more, do you have a good long-term strategy for how you're going to run your accounts? And that is a key metric and key kind of litmus test for any trader. Let's go through and look at the news real quick. You know, by the way, we're in the Trade Center at Tackle Trading, very simple tool that you can look at every day. 2%, NASDAQ down nearly 3%. This is an outlier day. This is a big day. This is a significant day from a pricing standpoint, from a volatility standpoint, from a risk standpoint. Dow Jones Transportation Average. Let's look at just some things throughout the morning here. Oil and growth concerns weigh on the markets. Fresh lows established in afternoon trading. Indices dip lower. Indices float above new lows. Indices are drifting above the lows. They're all kind of just pushing. If you've never traded in a bear market before, you're going to have your eyes open this year probably. You know, with the market conditions we're seeing, these days can kind of come out of nowhere. And that's why you've got to be prepared going into them. Strong, I guess you could say utility strong, weak is everything else. EIA numbers on Wednesday for oil showed a build of 8 million barrels. More supply again, oil under pressure. No surprise there. Calendar. There's nothing really going on this week. I mean, we had certain things happening from an economic calendar standpoint. Let's take a look here for Wednesday. EIA numbers came out in the morning, a beige book number, Treasury budget. Tomorrow you've got jobless claims, industrial production, retail sales, normal economic data. It's not the specific news. It's the nature of all of it together that's pushing the market, and the sentiment has definitely changed. There's no question about it. Futures market, as we look at it, there's 5 products I look at every single day. Let's look at the daily chart on the S&P 500. The S&P is pressing towards those August lows. 1850 is a key level to watch. We're clearly pushing towards that, and you know, we're running some risk there. When it broke below 2000, the writing was on the wall that we're heading lower. You know, don't make the charting complicated. It broke down, it's selling. That's the response we would expect from a chart. And that's what we're seeing right now is pressure in the S&P. Volatility index. Options are becoming more expensive. We're seeing the VIX up in the mid-20s for the first time in a while. It's been perking up here for the last couple of months. It's consistently staying above 20. That's a sign of moderate risk in the market. If you see it spike above 30, that is high risk in the market and an excessive level of hedging and fear from institutions. Look at the energy sector real quick here. Energy, crude oil, bearish. I've been bearish in the commodity report now for a month and a half. When crude broke below 40, it was clearly going down. If you took advantage of it, congratulations. If you didn't, learn how to trade when you see signals. You got to be confident enough to have good strategies to pull the trigger. Here we are sitting at 30. We've sold off aggressively to the downside. I expect a little bear dead cat bounce here about $30, but the pressure remains until we see other data and new information coming out there. The metals market, I do like to look at gold. And gold is, even with all that risk, it's not really even getting a bounce. I'm still actually, from a long-term perspective, bearish on gold, neutral on silver. Go watch the commodity report from Tackle Trading, just posted yesterday on the site. Long-term pressure under that space. And last but not least for today, let's look at the currency markets, US dollar. Okay, U.S. dollar's rallying. If it could break that resistance, would be significant. Read a report from Christine, or a quote from Christine Lagarde, who's the head of the IMF, International Monetary Fund, talking about the Federal Reserve, and that if they don't raise their interest rates the way they said, it will put pressure on the global economy. See, everybody's kind of putting pressure on the Fed right now to raise rates. If they raise rates this year, the dollar should rally. That would be the rational response to that information. So it's going to be Fed watch for the dollar, for gold. It's going to be economy watch for oil and energy and the overall stock market at large. And a lot of this comes back to that reminder that we've got pressure internationally. Stuff going on in China does affect you. Okay, I know that a lot of new investors don't like to hear about Europe and China and all that stuff. It makes it seem too complicated, but it all ties together. Okay, China's under pressure, bleeds into the markets internationally. China last night had another big down day. That is eventually triggering into the U.S. here. Even just think about the intraday chart here on the S&P 500. The ES contract, when we look at the S&P from the second we opened, it's just been under pressure all day. Day traders and trend traders and algorithm traders and anybody else who's paying attention today has been selling that thing. You know, when you day trade in an environment that's more normal, 0.5%, 1% up or down on the S&P, you usually get a little bounce, a little intraday reversal. When markets are bearish and when markets are fearful, you start to see things that you hadn't seen before. So if you're a new trader and you're a day trader, make sure you have daily curbs on when you're going to stop if you're wrong. Don't let your emotions in. Always stay zen, my friends, and go out there and execute. Get in the game with TackleTrading.com. It's been Coach T, and we'll see you.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.